Okay, let me share my screen and we can get started. Sorry about the late start.
No worries, Doc. Good morning.
Good morning. Okay, so looks like we're basically flat to yesterday's close. We kind of undercut, we kind of pull back overnight right to this negative gamma reaction zone. That might have something to do with why we pulled back to there. Overnight session hedging is a little funny, but there tends to be some kind of correspondence. Just it seems to work that way. Recap of what happened yesterday. And if we kind of even go back to Friday, let's just go back to Friday for a second. So if you remember last week, we bottomed out at 68.25. Seems like a lifetime ago. We bottomed out at 68.25, closed at 68.58-ish. We had a gap fill in there from the Thanksgiving gap over here. Here's the Thanksgiving gap down in the 68.35-ish area. Gapped up on Monday. And it's been pretty much off to the races since. We've exceeded the expected move pretty much 2 days in a row because vol's been muted, so expected move has been tight. And here we are, like I said, basically flat. And I know I said this yesterday, but I think today we finally get some consolidation, and I'll show you why. And we'll do a little bit of a deep dive into volatility space. I'll talk about that for a minute. Let's switch gears real quick to the options deck. Okay, so here's the gamma positioning right here, right now. What do we see? We see these two zones right here. We see the zone that we're in, 55 to 40, positive gamma sticky. We can kind of get stuck in here pretty easily with this little up to 60, 69.60. We have some customers long. We have some people betting on 69.60, unless it's the other side of the spread, but it doesn't really matter. If we can kind of break out over yesterday's high, which was just a drop under 50, then we have 60 and maybe a ladder up to 70. And we have a lot of positive gamma mean reverting flows, pushes us down up here at 85 and higher. So that's 40 points from here. That's outside the expected move. But those would be big flows, so they're going to have an influence even when we're at 75 or 70 if we get. Below this zone where we are right now, 35, the overnight low. There's a little bit of a magnet there. A little bit of a, we can easily get to 35. It's 5-10 points below. Undercut, get into this little zone, between 25 and 15. Small, don't torture the data, but there's something there. It's also outside the expected move. So broadly, I don't know about I expect 69, 20, 15, 25 on the bottom and 60, 65 on top. I pretty much expect the move to be respected today for once. Risk is probably to the downside. Just from a gamma point of view, there's not a lot there. Don't torture the data. There's not a lot there. However, if we take 1 and 2 DTE into account, so here I'm getting rid of today. Let's see what's in the chain for tomorrow, because some of this stuff is going to have an influence today also. And so in the chain for tomorrow, again, we have the 6880 all the way up to 7,000 positive gamma suppressant flow, but also pulls you up toward it as you go up. They sell, but as you go down, if they sold too much, you have to go back up. So if you're in that range, you get stuck to it, and that's what happened yesterday up at the 6950. There was a lot of sold options up there, and as we were close toward the end of the day, we just got stuck to it. Move away, move toward it, get sold, move away, up, get bought again. We got stuck toward it. So we have that same 50 to 25 mixed, red, green, frog in a blender pattern. And that's kind of, the choppy zone. So if we break, below that 35 area, anywhere in here, it's fair game. 6925 round number should stall out, bound with the expected move, and 6900 is still solid. Still solid. And that's basically the roadmap here. Okay, so let's see. This is from the Substack that my subscribers get. A little bit of a recap. Semis ripped yesterday. We closed right below 6950. NVIDIA kind of popped. They previewed whatever their next latest chip. But last I heard, Rubin was a sandwich you got at the deli. Apparently it's a chip also. So they highlighted their Reuben sandwich at Katz's Deli, and also the chip, and we stayed bid anyway, et cetera. Macro bros are talking about late cycle bid for commodities. I don't know about all that bullshit, but that's what they say, so maybe it's true. I don't know. Yeah, if you notice, copper had hit an new all-time high the other day. Metals, iron ore, I was looking at some of that stuff. So if there's anything to this late cycle thing, and I don't know, but that's what they say, so maybe it is. So that's what that was. To me, it was just flow. So now we're in the 6,900, 6,950, 7,000 neighborhood. That's kind of where we are. Events for today, we had ADP, and I guess nobody minded because we're racing back up towards 6,950. So whatever ADP said, it's good enough for me. And we have ISM services and job openings, unemployment numbers on Thursday, and then we have NFP on Friday. We'll talk about that in a minute when I get to the volatility space. So here's some of the ranges. Week to day range 68.90, 69.50. You can do this yourself. You can look at a chart. You don't need me to do that for you. Straddle today, 22-ish points. Very narrow straddle. Friday, 68.85, 69.95. 68.85 is kind of where we gapped up on Friday, Friday to Monday. So the straddle is pretty much pricing the bottom of the gap-ish and 7,000. That's where the straddle is pricing. And then here's the sticky zones that we talked about. Don't need to redundant. Here's the kind of annotated version of that, so you can see kind of clearly where the zones are. And kind of little arrows showing you the hedging pushes it away, pulls it back. We have some attractants over here and over here. We kind of stall out over here. I learned how to use these arrows and boxes about month ago, a few weeks ago. It's been a game changer. Okay, let's talk about volatility. We rallied 0.62 at the money vol. Didn't really go down. We would expect vol to go down more, but it didn't. And let's just take a quick look at this. I did a little deeper dive at the VIX decomposition index for my subscribers. But long story short, sticky strike. That's at the money. Sticky strike. That vol went down, parallel shift, everything went up. Put skew went up a little bit. They bid the wings. Call skew went down. Downside convexity got bid up a little bit. Upside convexity calls got bid down a little bit. A little bit of a vol up, spot up thing also. And so that's the brief version of what's going on here. And I'll be talking about this tonight. I have a webinar for my subscribers, and we'll be talking about, and they're I guess asking questions, and this was one of the questions. They want a little deeper dive into this, and so we'll go into deeper dive in all the parameters. This is not something that I have super secret access to. Go to CBOE, VIX decomposition. You can read the paper right here. You can download the PDF. You can read it for yourself. Shem Carson has on his thing an interview with Mandy Zhu, the CBOE lady who is the face of the CBOE and writes a lot of stuff. Explains it. So there's plenty of stuff there. There's no big secret. Secret is how to apply it. Okay. So let's talk about the 9-day straddle for a second. So the VIX 9-day, which measures the options premium, the VIX, the strip of options used to calculate the VIX based on CBOE. That project 9 days into the future, then go the Friday before, which is this Friday, NFP Friday, and the Friday after, which is OPEX. So that's what's priced into this. So VIX 9 days, about 12 headline math, wider 2-day window. It's about a point. It's about 80 point. So straddle's pricing in 55 points up or down for Friday. And the VIX 9 day is pricing in about 80 points. It's pricing in a much wider range. I'm guessing that's NFP pricing. I'm guessing it's overpriced. I'm thinking even though vol is this low, that short-term vol is even higher price than what's priced into the chain. Maybe you could sell the wings. You'd have to look at it. And here's the trading view strings. Here's the cheat card that my subscribers get, and that's what we got. And let me pull the chart back up. And who's ready to go next? We got Dan and we got Chewy.
I can go quickly.
Okay, go ahead.
I'll pull up my screen.
You got the screen share?
Yes, sir.
Okay, let me pull my stuff off. Oh, good. Oh, that's right. Now you're an admin. You can do that yourself. Yay.
All right, guys. So ADP came in below expectations. That doesn't really have anything to do with my strategy, but I figured I'd bring that up. What I'm looking at here is we're kind of right up at my ceiling for today, ceiling being 69.90. I'd like to see price push up a little bit above it and then start coming down. That being said, if we still have strong closes above the 69.90, I'll be tagging that 7,000 above here. This is ES. If I'm honest with you, I don't think we tag 7,000, but we should always have a plan in case we do.
That 7,000 is SPX 6960. That's basically that same level.
Okay. And from here, I think, do you think we get that 6960?
Yeah, that's 6960. That's where the negative gamma is. So that would be, if we could break out of this sticky area, that kind of would be where we're supposed to top, give or take a couple points.
Got it. I do have a big range for us today, 69.90 down to 69.60. I'm expecting a softer bounce around the 69.60 today if we can break our pivot at around 69.78. Big if. I'm kind of betting on the downside today, gun to my head. I got it wrong yesterday, but looking to get it right today. Pretty simple game plan for me today. I have a lot of targets to the downside, even some all the way down here at 69.10. I think we can start to see some aggressive selling if we can hold below the 69.60.
69.10, is that the gap? Was that the Monday gap?
I don't exactly know what this level was for me. I don't chart gaps on futures, so it definitely isn't gap. It's just a strong price action level for me down there.
Okay.
Yeah. But I'll post this in the chat, and you'll keep an eye out for updates throughout the day.
Okay, great, thanks. And let me get this ready. Hold on. And here's the trading view version of ES with the same kind of levels. Okay. Dan, you got something for us? You're muted, Dan. Dan does a lot of the individual equity stuff and volatility, premium mispricing, and there he is.
Oh yeah, that's where you start. I had a little rant with Ran about taxes, so I have to sort my head. So we're not here to help you evade taxes, but to trade better. And thank you both. Yeah, so we should have Ran here. I'm telling you, Paul. But this is your playing field. You got the connection. So what have I got here? I will make it very brief. A lot of the moves which we saw on the flow yesterday happened. We have Gin in Town taking advantages of that stuff. We have had NSDK yesterday. I will show my share my toss so you can take a look at what is happening. Give me
You
a
have some charts
second.
handy?
Sorry?
You have some charts handy?
Yeah, I'm trying to do that. Wait a minute.
Okay, so while you're doing that, everybody take a look at this correlation. Look at how low correlation is. With correlation this low, that's related to dispersion trade. So correlation this low is rotation. Nothing is correlated to anything. Everything is kind of moving on its own, which is rotation, which is good. But when it's this low, that we're at an extreme. So we have to watch for extreme divergences. This is at an extreme. Let's look at this one here. This is at an extreme. This VIX measure is at an extreme. Doesn't mean we have to go down. It means that let's just keep our eyeballs on it. Let's look at where's the VIX VIX ratio? VIX VIX ratio is actually looking better. We kind of topped out over here. I had the pullback, and then it's coming in below that 6 level, 6.2, depending how you want to look at it, is kind of where you want. And it's a simple ratio, just divide one by the other. You learned how to do that in 3rd grade, 5th grade, I'm not sure when, but you learn how to do that. Divide one number by the other, and 6 is kind of where you put your eyeball. 6.2, whatever, it gets a little high. Down here in the 5.5s, it gets a little low. Down near 5, you know that we're due for a nice big max. Real simple. More, not so much day trading, but swing trading or longer term stuff works beautiful. Works beautiful. Okay, so you ready, Dan?
Yeah.
Okay, so let me get rid of my stuff. I just had to fill in some time. Whoop,
Start.
hold on, there it is. Okay.
Okay. First trade yesterday, which we were seeing in the flow. So I'm pointing out things why it's important to watch the flow. If you want to do momentum trades, Paul and I, we are not the momentum traders. Paul is doing his daily SPX, but it's more of a theta burn and depending on the Vega he wants to use. But if you want to do momentum, and that's why a lot of people are into flow, that's
Can you
why.
zoom at it a little bit? We can't really see what's going on. Okay.
Okay, so we had SNDK yesterday. The flow was very heavy yesterday, so most of the trade is through. Why I'm showing this? This is just the weekly expected move, which means we broke that very early yesterday, and in the end we're very stretched far out. But I wouldn't say that there isn't any continuation, but be wary of that. So. It might be late to jump into that. Let me give you another overview of the things I saw yesterday. Let me give you some of the noteworthy trades you should have in mind. We had a lot of puts, 350 puts in MSTR. This is something I noticed. We had a huge block trade as a hedge in Tesla, which means the momentum, as we said, happened already. Let me show you here. But people are bracing themselves. So again, come on. Paul, the first day I started TOS, I started using it because you are having that and you can do a lot of stuff, but it's always a pain in the ass. Sorry to say that out loud here.
I tried
Don't take
IBK. I demoed IBK.
Yeah. So again, we saw the hedging here, and that's why we saw also the big red candle here. This is not it as I don't mean it as a technical, but again, you saw we went up to the expected move. As I told you, if we break the 50, we could go to the 70, but we should be wary here. Again, what happened here? The expected move, and I'm not talking about the GEX levels, which apparently are very important, the resistance levels, but again, the expected move here clearly gave us in as a side what to watch with a flow. So yesterday we had a lot of
Didn't you highlight that? Didn't you highlight that on here yesterday or the day before
yes,
the Tesla?
yes,
Yeah,
I highlighted Tesla. You said you had some shares up with Tesla. What I highlighted was that we saw a lot of call buying, which was good, which was happening here, but during the day. But what I highlighted yesterday was what happened on Monday. That's the thing with flow. Normally, you have to be there and see the flow live. And if there's a breakout, you can take it, which breakouts do work. And that's why we're talking here, because we do this for educational purpose. If you see, for example, the expected weekly move, and this is anchored on Friday. It's not the rolling average move. I can show you that later. You saw a break up here, and this is one of my classical trades I would take. I would maybe take a trade and sit here and sell premium if it's worth selling premium, which is not happening here because we are below that. We could take a look at NVRP. We're not doing that. But what happened here? If you just took a trade here, breaking the expected move, it's a 50-50 chance statistically. It's been tested in a lot of PhD from PhD people and university graded level and quant levels that we have a 50-50 chance to stay here in the range or here in the range. So that's why we take advantage of that. We hope that there's a continuation and we would sell somewhere here at the 0.3 standard deviation, something I mentioned yesterday. If you want to go for a fast breakout, and this is a daily trade, but again, the expected move showed us something yesterday that on Monday, we couldn't break here. And yesterday, the flow for Tesla was marked. There were 50 million, there was a 50 million block trade, which means this was taking precautionary measures. So that's why we left and again returned to the mean. This is
Okay,
one of
so
the
what
classic things.
Dan does, and one of my little taglines is "Got to watch the flow to be in the know." And what
Yeah,
Dan does is he watches the flow, he watches the unusual options activity. We have unusual whale spot in the server, and then he does this little quantity stuff with the options because we're kind of a little bit we're common sense geeks, I guess. We look at the
yeah,
flow, we look at the you know at the IV, relative IV, whatever gamma levels. Gamma levels have different strength for different underlyings. Look at some technicals because you can't pretend that they don't exist because they do, and we come up with ideas. And it's a lot of fun talking about them and modeling them out and all that kind of stuff. And what's more fun is making money,
yeah.
which we do.
That's the thing. So let's go back. So we will make. I prefer to post these flows in the chat room. A lot of these things happen right away, especially in the small tickers. JD in town really makes good money for you every day there. So these moves happen very fast. You have to be above a good side, which is showing flow, but I concentrate on the more liquid ones and the S&P 100, and I mainly trade volatility. So these are
So here's
things
one
which
of JD's trades. So here, for example, JD caught puts in Mr.
yeah,
MSTR, MicroStrategy. Look at that. Beautiful.
yeah,
Um, is this the scan disc one? Where's the scan disc one? There's Sox all the quarter trade. Here's kind of pretty decent, huh? Pretty decent
yeah,
numbers.
yeah,
He
yeah,
Here's
yeah,
the
crushes
yeah,
it.
scan disc trade. Here's the scan disc trade.
yeah,
$1,000.
yeah,
So, we have that there too. I do SPX. I can't watch everything. I do some of this stuff. I kind of poke my head in the room and see what the boys are doing, and I have faith in them. So I kind of do it. I might tweak it a little bit because if two legs are good, six legs are better. And I like, I like to make it as complicated as possible. People that know me, I'm famous for my Frankenstein flags. Take different
yeah.
pieces and stitch them together like the Frankenstein monster.
So again, another good example of why it's important to watch the flow. Yesterday, JD called Amazon beast, and it was a beast because we had a 6.5 million above the ask. Some people call it golden sweep. This was like very aggressive call buying, very early in the day, like 20 minutes into the session, and look what happened here. We stopped right at the weekly expected move, touched it, so that wouldn't have been a trade, but this would be something for me to take note of because we broke
And
the call wall.
maybe you can
Sorry?
answer this question here. Somebody said how to create a scanner in TOS. I don't really do that anymore. I use unusual whales. I don't really even bother that. I'm usually watching SPX option flow like a hawk. Do you know how to answer that question? How to create a scanner in Thinkorswim?
Yeah, basically it's easy. Basically, you go into study and you can add a study. Best thing is edit a study, and then you can go to create, and then you need to have a thing of you have to just give it a name and write your code in. And this is something I answered already yesterday. That a lot of these things is tested by me. A lot of these things has my own flavors and other stuff inside. So things most people will not find useful or will make it difficult for them. But it's very easy. If you just read down what is the expected move, it's just one standard deviation. Like let's say this is a bell
And you
curve.
have that fancy scanner that you use with when expected moves are breached and not breached.
Yeah, here.
Give us a minute on that one, just a brief
Yeah, yeah, yeah,
explanation.
yeah, yeah. Yeah, let me just show you something. Okay, that's that. So that's very easy. I will explain it. Let it load. It's another great thing about TOS. It's very slow. Um, so the easiest thing would be people love green and red. Just take the breach and don't take the breach. But two things. A lot of the times the move has happened because the expected move is one standard deviation. What do we know about expected move standard deviation? During a week, normally the stock will stay up to 70% or more, it's 68% in pure math, within these expected move. This is what we know. So basically, if this breaks, like I said, we have a statistic, but before that breaks, we have all the gamma levels. So it's a lot of going back and forth. So if these breaks happen, it's not given that there's a continuation of momentum. These are not momentum trades here. Like JD will give you the momentum trades. He will show you trades, and his momentum trades, if I put on my scanner, they will be there, but he will have caught them before. I look at something else, and I will make it very simple. Let's look at Salesforce. For example, Salesforce had a breach, I think on Monday or yesterday. So basically, we have to look why there was a breach. The last was 262, 63. Let's round that up. So what happened? It's green. It happened on the upper. The upper is the 277. This is updated. That's why I'm telling you, don't use just my stuff. It was lower. The basically the expected move for the week, I can show you here. The expected weekly move was 260 something. So when that broke, I would have checked the delta exposure, and I would have checked the important GEX levels, and most probably put up a trade here. And to have it easy, I just coded something out of statistics that we would have a break even roughly about the 261. If you take the GEX level, the gamma wall back then was 260 for that day. So I would most probably set up a broken wing butterfly. And there it's a cheapish way, which gives you great exposure. And if I would have seen that there is no, let's say, overstretch, overreach, I would have put up a pure Vega and Theta trade, which would be a simple calendar. And what helps me there is I look at the Z-score. Where is the Z-score? What is Z-score? It's just, again, the mean reversion of implied volatility. That's the first sanity check. And the second sanity check is how rich is volatility. So this is here in the mid. Does it make sense to maybe just go with a vertical, sell the 260 and buy the 259 as a vertical spread? Would that make sense? No, because volatility isn't rich here. It's in the middle, so that's perfect for Vega expansion. And let me show you this as a last one. You see here, we go down a bit, volatility goes down. It's not expanding what we want. So most probably I would have gone with broken wing butterfly. If we were on the rise, let's say like here, or if we go back a bit, and then I can finish this session.
And so the point is, a lot of these trades are quantitatively driven. And if this is something that's of interest to you, like, subscribe. In the Discord, we have a lot of this stuff. I'm going to be asking Dan if we can maybe do like a little more organized presentation for subscribers, more in depth than just for the general public, and more of just an overview. And so people get familiar with this method, because we do a lot of other things other than SPX. I do the SPX. Chewy Bad Hombre does the E-mini and the NQ future scalping. Dan and JD do momentum trades or volatility kind of trades, multi-leg option trades, or you can just trade them with one. And you get all that and more for a bargain price, which I'm not sure what we're charging these days, but whatever it is, it's a bargain. So like, subscribe, and that's about it. Any closing thoughts, Dan? Thoughts on today?
Yeah, like I said, watch the flow. Again, GFS yesterday had a huge call buying activity. If you saw that, if you looked at just like the expected move, I'm not even telling you using the GEX levels, which are great for everything. They're magnets, and if you know how to read a DEX chart, if you just have these simple things, the standard deviation, simple math, you caught the trade here just as a momentum trade, you would go here, but I'm not the momentum trader. I don't have a lot of time. Basically, I have never have time. That's why I like trading quantitative, and I believe it's a good repetitive way to make money. This is what you do, Paul. You have levels. You have a setup. You have everything, and that's the thing. Like you trade the Greeks. So I'm doing just the same, just from a quantitative perspective, because I don't have time. Simple as that.
Okay, so somebody had a question about fibs. I thought they were talking about you. So JD uses fibs.
Yeah, we talked about
I'm,
fibs.
I'm not a fan, but he makes money with it, so that's fine. If he threw chicken bones and read the chicken bones and made money, that works for me. I really don't care. Astrology
Oh,
charts,
oh,
whatever.
yeah, yeah. Maybe one last thing about fibs. I've used fibs. They're great. Fibs are good if you are already in a momentum trade to see if when it's time to enter and when it's time to exit, how far it can stretch. If you want to use that next to definitely gamma levels and other things like the expected move. So, but these are short-lived trades. You have to monitor them, and maybe some people, they don't have the time to monitor, and it depends what kind of trader you want to be and what kind of money you can spend and how much time you can spend. So
Yeah,
you
I
don't
can't.
need.
I'm too active also, so it's hard for me to babysit a momentum trader too, because that means I have to watch that, and I'm watching too many things at the same time. You
Yeah,
know.
go. So that's why we play the Greeks. We play the mathematical odds, and but it's everyone. If you make money and you're consistent, then you're a winner. Nothing else counts. So it starts in the mind, and that's the mindset. And if you have the right mindset, nothing can go wrong. Like you
Okay,
could.
everybody. Um, it's 9:12 already, but we're having fun. We're gonna do some more stuff like this, maybe off, not during market hours, so it's fun, so we can just kind of kick it. And we've been known in the Discord chat room. I haven't been doing it that much lately because I've been kind of doing more admin than I'd like to be doing. But Dan and I and some of the guys would sit around and pontificate like this for hours and talk about ideas and how you get. If you like that stuff, join us. Oh, somebody, amazing presentation there. Very interested in quant side of trading. Okay, and yeah, I mean, my tagline, one of my many taglines is quantuition, the quantitative stuff with that little bit of trader intuition. I'm sure most of you are traders. Your gut kind of tells you. The trick is to know when it's your gut because of pattern recognition, because you've seen it 1,000 times. You just know, you don't know how you know, versus when it's a wish or a hope or a fear or a FOMO. And that's part of the mental part of the game, and trading in the zone and the Zen kind of thing that I'm into, which is a whole another topic that we could do. So yeah. All right, everybody. I'm gonna wrap it up here. As far as trades today, it's not a great iron condor day. As far away as you can get on top, and there's not much gamma at the bottom. So I'm going to be using the expected move. I'm going to be using, like I showed you before, I'm going to be using, where is it? I'm going to be using kind of like the multiple days to kind of get a read on where we should stop and see where the juice bar is. And I don't always have to trade. I don't have to attend every night fight I'm invited to. If it's not a great day, I'll trade smaller, and I'll just cut my losses sooner or cut my winners sooner. And that's it. Take what the market gives me. Some days, I mean, Monday, Tuesday was beautiful setups. Monday was a beautiful setup. Today, so here, look.
Paul, one addition maybe, because we
Yeah.
have traded a lot of, I traded a lot with you. Maybe something we can mention in the next time. Why puts normally are richer, and how we can skew things maybe, and how we can transform these things into flies. And the other thing I started last time, maybe we can show people how they can trade cheapish flies during days like this, or when we have like great events coming up. So how you can make, like, with a very small debit or tiny credit even, you can hit like 300 to 400% very fast, and you shouldn't be afraid of that. Something, because you have the knowledge of flies, and we have done a lot of that stuff. So maybe we can, in a day like that, with nothing
Yeah,
but
yeah,
a day.
I love flies for those kind of days. That's exactly right.
Yeah.
You have a really good risk reward.
Yeah.
And so here's today, 69.60. That, let me just do a quick, see, I can't get enough of this shit. 69.60, if we can break over this 50 area, 69.60 would be the path of least resistance up. And you can maybe get up here. But you see, notice you have the suppressive flows from here earlier in the day, but then they kind of start to go away. This axis is time. So you can kind of be stalled out here at 65.70, 70 up over here, and kind of suddenly, especially if this is underneath you, kind of pop up at the end of the day. So be careful with that. Here's the range where we're stuck. Here's that 69.35 that I pointed out. And, it doesn't look like it wants to break over here. We still have mild supportive flows from down in here, but that can change with a little pop in IV. Then suddenly the whole thing shifts. If it picks up, then suddenly everything starts to tilt a little bit. Okay, anyway, that's it. Thanks, everybody. Thanks, Dan. That was a great presentation, and folks are really interested in learning more about it, and we'll do something. Chewy, thanks. And Chewy's got a course that he can teach you how to do that, and we're working on some joint courses. And stay tuned. 2026 is going to be amazing. Like and subscribe and all that stuff. They tell me I'm supposed to do that. My hand is. So, okay, take care, everybody.
Good luck, everybody.